Hello and welcome to ATFX's Bank of Canada Rate Decision Preview. My name is Twidale, I'm the Chief Market Analyst. Do feel free to subscribe to our channel. Let's get into what could be a very exciting rate call tomorrow from the Bank of Canada. First things, I think we need to look at the local jurisdiction. Expectations are firmly priced in now for a 50% rate cut from the Bank of Canada. Previously, they were looking for another 25, but recent data has brought that expectation up for a higher rate cut, with even some banks calling for a 75 basis point cut. 75% at the moment priced in for that 50 basis point cut. So two or three key reasons for that. Inflation has come down since their September 25 basis point cut. Inflation now sitting at 1.6% on the year-on-year data, nicely below that 2% target for the Bank of Canada. So it does open up the way for them to be a little bit more aggressive in their cutting. Also, unemployment data and employment data still a little bit tricky over there in Canada. They did get a slightly better number last time out, but really still under a little bit of pressure. And sentiment data as well over in Canada, even the Bank of Canada's own sentiment factors are showing that business sentiment is a little bit weak at the moment and they're looking for a little bit of stimulus. So all good reasons for a rate cut. Some are calling the 50 a jumbo. If they get 75, it's a massive one. If you get 25, it's going to be a bit of a disappointment. So here's the move that we've seen recently. We've moved up from 134 to 138.50. That's been a strong. We know that's moved on the back of a depreciating CAD, but also an accelerating move in the dollar. We've got to look at the dollar side, as we always know. That's on Fed rate cut expectations being pulled back. So one of the main reasons that we've seen three reasons why the CAD's moved. Inflation, that's down at 1.6%. We've seen employment, they're still struggling with a high unemployment rate. And also business sentiment is weak. That's seen depreciation in CAD, dollars up here. Now, looking at this chart, we're not too far away from that yearly high, just underneath 139.50. If we get Bank of Canada either not cutting by as much as expected, which is that 50 basis point, they only go 25. That will see a break of this topside move because it will really surprise the market. The other side of things we could see, of course, is we could see a 75 basis point cut. It is unlikely that we will see that, but there are a couple of players out there that would see that move go higher. The other side of things, of course, is that we could see that elongates this move and accelerates it higher is the dollar side of that trade. So we could get that move initially from the Bank of Canada tomorrow, coming a bit more dovish, either dovish in their statement or a bigger cut. That takes us topside. Over the next few weeks, we've got that huge geopolitical risk that sits south of the border with the US. Less rate cuts because you've got an inflationary situation which could come with that Republican sweep. Donald Trump comes in, he gets control of both Congress and the House of Representatives. It enables him to put in those tariffs he's talking about. That is definitely negative for the CAD because Canada is obviously a very strong trading partner of the US as well as other jurisdictions. And that could really open the way from a technical perspective to move all the way up to those highs that we saw way back then in 2020. So massive potential for trading opportunity. The charts sort of say it all. Obviously, the converse side of this as well is that we do get a less dovish Bank of Canada. We don't get the big rate cuts and we move back into this range. Expectation, I think, in the market is that we could see this move continue. It has been sharp. We know there's uncertainty coming, both for the dollar side and for the CAD side, but great trading opportunity coming up. I'll leave it there with you. Thanks for joining us at ATFX.